Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to complete my series of 5 undervalued businesses. And today I want to analyze for you a great Canadian company, a great Canadian bank. And the bank I want to analyze is TD Bank, or Toronto Dominion Bank. Toronto Dominion Bank is the largest bank by total assets in Canada and number 5 in North America. So they work in Canada and also in the US and in the big market of the US, and this is a difference to some other great Canadian banks. They have a very diversified business. The Canadian retail business with 58% is the largest part by far, followed by the US retail bank sector, the TD Ameritrade, and the wholesale. TD Bank is traded at $64 with a market capitalization of 117 billion, a P/E ratio of 14.3, and a nice forward dividend yield of 3.93%. When we look at the long-term chart of TD Bank, then we see that over the last 25 years, the stock just compound upwards, of course with some crashes, especially here in the financial crisis, but then also lately in the pandemic crash last year, but now then just up again to new highs. And so, of course, the question becomes, is TD Bank maybe overvalued right now? Is it too late to invest? Or is it still a great chance to buy into a great company? And this question I try to answer in this video, and therefore let's do the financial numbers. And therefore, as always, I go to macrotrends.net, and there we start with the revenue, and we see over the last 15 years the revenue just grow, of course with some up and down, but overall an uptrend. Very good, very nice. And the same trend we see also when we look at the earnings per share. Also here, overall an uptrend over the long term, with very stable earnings. When we look at the margins, we see that TD Bank right now working on net margins of 23%, and almost always over the last 15 years the net margin was between 15 and 20%, which is good, a very good net margin. Also, the return on investment with 11% is good, and also over the last decade it was almost always over 10%, which is a good and solid return on investment. And also the return on equity is very good, very stable, between 10 and 15%, and right now it's at 12.72%. And last but not least, take a look at the balance sheet. TD Bank right now have a long-term debt of 8.85 billion compared to a shareholder equity of 74 billion. And this overall is a debt equity ratio of 0.12. And this is of course a very, very solid balance sheet. And so overall we can say that TD Bank is a very, very good, very stable business, slow growing but still growing business, especially in the USA. And on top of that, TD Bank is also a very strong and consistent dividend payer. They pay continuous dividends for 164 years now. And this is of course just great. And also we see that the dividend over the last 15 years just grow 11% per year. Also very, very good for shareholders and for long-term shareholders, that also the dividend just compound over time. And so overall we have a very high quality business. And the question is it on his fair value? Is it overvalued, undervalued? Could it be a good investment now? And therefore, as always, I calculated the intrinsic value. And when I calculate the intrinsic value with a current earnings per share and a growth rate of between 5 and 7% per year, and then expected return of 12%, then I come to an intrinsic value of around $70, which means that Toronto Dominion Bank right now is a little bit undervalued. Of course, if your expected return is a little bit lower, if you're maybe happy with 10% or 8%, which would be still nice in this very low interest rate world, then it's even more undervalued and could be a very, very good solid investment over the long term. For me right now, it's not that interesting because I'm already invested in the Bank of Nova Scotia, or better known as Scotiabank. I'm quite heavily invested in the Bank of Nova Scotia. I bought my first shares in the pandemic crash last year and then just add up over time. And so right now I have 106 shares of this great bank, and the whole position is up right now 68%. This is of course very, very nice. And so I will not add to TD Bank at these prices. If there will be maybe another crash, another correction, and it's possible to buy TD Bank maybe 20, 30 or 40% under the intrinsic value, then I really think about also to buy TD Bank because it's really a great bank. And if you're new to my channel, here you have an insight to my real money North American portfolio, and you see all the positions in this portfolio, and you find deeper analyses to all of them on my channel, where I go through the business model, the financial numbers, the management, calculate the intrinsic value, and then tell you when and why I bought. So feel free to check this out. And if you like the whole idea of long-term value investment and my transparency on my portfolio, because you can get a weekly update on this portfolio on the channel, then just please subscribe to my channel and follow me on my road to financial freedom. Thank you for that, and then just see the next time with the analysis of another stock. See you then. Take care. Bye bye.